Good morning, everybody. This is Signet with the Bullish Bears. It is Wednesday, 10/23/2019. I'm going to be streaming in the day trade chat room. If you have not come by, we have a 14-day trial, so you can sign up without putting any money out there, and you come take a look at what's going on. Maybe dig into our blogs. We also have a ton of free content on YouTube that we put out there, and a lot of people think, oh, if it's free, it must not be worth anything. That's not true at all. There's a lot that we think that should be in the public domain and that nobody should have to pay for, right? Like um, developing proper trade journals or understanding risk to reward ratios, all kinds of really great stuff that we don't think anybody should have to pay for to learn, right? But of course, we do keep advanced level material that we expect people to pay for. So many people come into our community for the live streams, but when it comes to education, we really do have a ton of content. You can see here in the options tab on the next level training library. This is for more of the yearly membership. The material in here is not what you're going to find just doing a quick search for, say, like covered calls. In this video for covered calls, I give a complete rundown on what it is, how to do it, what strikes, what expiry, the deltas you would want to use, all of that to help you start to develop some alternative income, right? And say, for an example, uh, debit spreads. There's a gold standard worldwide used strategy when it comes to debit spreads, what deltas to use, how far out in time to go, and those those things have been tried and tested since the 70s when calls came out and since the 80s when puts came out. There's been a ton of research done on this, and having the criteria to build your trades in a way that make sure you're not paying too much or make sure you're selling it for a decent amount, right? If you're the one selling the spread instead of buying it, all of this is in our next level training library. Calendars, back ratios, putting on hedge trades like the VVS or the risk twist spread, understanding your risk of assignment, ex dividend, exercising contracts. My videos on the Greeks are hands down better than anything I've ever found out there because it seems like everywhere I went to learn the Greeks, they wanted to give me the textbook definition using bank speak, and I don't speak bank. I don't understand finance language. I wanted it in plain terms. I wanted it in a way that I could use it in my everyday trading and understand what I was doing with it. When I couldn't find it, I learned it and then I developed the videos on it so that people wouldn't have to go through the struggle that I did. Right? So these videos, this we do keep these under lock and key. We do want people to pay for these because this is a lot of money and time and research that went into developing this stuff, and you know it's there. So most people they do like coming into our stream rooms, and you can watch the replays if your day job prevents you from catching our streams live. I'll give you an example of, say, like Rose, who works most often in the swing trade room. She gets put in this box like she's the futures lady, right? Because she always is focusing on futures, but that cuts her so short, right? We can't put her in a little box that just says she's the futures girl. She teaches technical analysis. And it doesn't matter if you're trading Bitcoin or futures or options or shares of a stock and penny trading. If you can't perform technical analysis, you're seriously handicapped, right? Because you're going to apply that to anything that you trade. And so watching her replays is like getting your CMT certification, right? It's your opportunity to learn technical analysis on your own time without having to come in and catch her live streams. And that's just one example of the ways that these streaming replays can really help you out and grow your your skill as a trader, no matter what kind of trader you want to be. We've had a little fluctuations in the market. There's a couple of big name companies that are reporting today, and they kind of had a rough earnings. Caterpillar is one, and Boeing is another. And I know those names, they're not on the sexy list. They're not what everybody considers to be, top of the line. But when you go into the market tab up here, Market Watch, and you set this on index, you flip it over to the Dow Jones. The Dow is the easiest one to use just to begin getting familiar with these with the AD and using this in our daily trading because it's only got 30 stocks. Some of the names in here is Boeing and Caterpillar. Look at the number one name on the list. Of course, right? Apple. It's the largest market cap out there. So goes Apple. So goes the marketplace. And it's one of the reasons that Apple is on my day trade list. There's not a lot of things that I will day trade day in and day out. Apple is definitely one of them. But trading Apple is like trading SPY, except their beta is different. Oh, hot coffee. So good morning, everybody. We are also running a free week on black box stocks. That company has more than once come over to the Bullish Bears community and have done live streams with us. And Creed has done a video on how to use it. If you're unfamiliar with trading, say, unusual options activity or that kind of stuff, it really is new compared to what's going on in the rest of the marketplace. And when I say new, right, the market's been around since before electricity. And so, there's a large history when it comes to the marketplace. Anything in the last 10 years is new to the marketplace. And so this black box stocks, it's free for the whole week. You don't have to pay anything for it. You don't have to give a credit card or anything. You just come into our community. You come into our live stream room. Um, I believe Dan posted the links in both the swing trade and the day trade room. All the information you need is there, and you can come in here and dial this thing in. Now, if you've heard me talk about the Twitter, Black Box Stocks does post things onto Twitter, but it's not as immediate or as quick as being able to uh, watch it live on their platform. And plus, if you are on the platform, you can dial this thing in. You can filter out things that you don't want to look at. Maybe you don't want to trade options. Maybe you only want to trade shares of a stock. Um, and that way you're going to want to trade things that are a lot cheaper, right? Like Boeing would just be out of your range probably if Boeing's freaking expensive. But ND blah, NNDM, this is a cheaper stock. This is something that we could all trade, right? And so being able to dial that down, the news in here is absolutely amazing. You can set alerts. Um, I like this up here that they run the not often looked at but very critical other ETFs that most places tend to ignore. Most places just look at SPY and call it good. But what I call the four horsemen, you want to watch all four of them things, right? The Dow, the NASDAQ, the Russell, and SPY. And it's just four ETFs, right? It's not like we're asking too much. So if you have access to our day trade room, go in there and click on the link and come in here and take advantage of this. This is free for right now. It does cost after our free trial, but this is one of those things that pays for itself very, very quickly. I am not a fan of spending money on things to to be a trader. Right? I shouldn't have to buy a bunch of products to be a trader. But there are a few products out there that make it worth your while and can really increase your exposure to the marketplace. So if you're having a hard time finding trades, then you're going to need to find some kind of trade alert service or something like that. And this is a trade alert, right? You can um, definitely take advantage of that. So the members only videos, what else? Oh, make sure you're following us on the Bullish Bears Twitter feeds. Now, as a member, we do have a private Twitter as well, but we have a public one. And, you know, just like the public black box stocks, um, having the member version would do you better. So let's take a quick look at what's going on in the marketplace, maybe prepare for the day. You can see we're coming back up off the low. We did take a bit of a dump earlier this morning, uh, right around 6 o'clock my time, 6:15. That would be 7:15 market time. Uh, took a bit of a dive, but we're coming back around, and yeah, let's see what we're going to get out of the marketplace today. My Twitter bots on Discord have kind of went a little goofy this morning, and so I haven't been keeping up with Benzinga's. Um, and they usually do like a 23 markets moving, in the pre-market. So checking out some media real quick, seeing what's going on in the market that we might be able to utilize for ourselves. Got the social lists, some technical analysis. TrendSpider is another one that we use a lot, and they have some great Twitter posts showing constructive support and resistance that I think really helps out a new trader. I also need to fire up the other stream, so give me a moment, please, while I do that. I was watching Dan do this the other day, and he did it so seamless. It was just so impressive. Don't tell him I said that, though. We don't want his head to get big. All right. Good morning, everybody. Need a sound check, please? Good morning, good morning. Okay, that didn't work. It seems like we're going through this more and more lately. And I'm really wondering what's wrong with the bridges, the sound bridge. Good morning, everybody. I need a sound check, please. All right. Now I don't see my microphone moving. There it goes. Okay, so good morning, everybody. Good morning, good morning. It's Signet. This is the Day Trade Chat Room. It's October 23rd, 2019. We did have some earnings from the mega cap companies Caterpillar and Boeing are two that really got my attention today. They are big enough to wobble the market. I did get a little bit of that in Q yesterday. I also threw out a QQQ credit spread yesterday. Before that happened, by the way, I felt really good about it. I put it out, and then 5 minutes later, there was like an options block or an options sweep or unusual options activity posted by Cheddarflow and Black Box Stocks, and I laughed because I beat them to the punch. That's rare, by the way. That's just really rare, but I'll take it. I will. I'll take my wins. So good morning. How's everybody doing today? Are there anything that you're really interested in taking a look at today that we can start out with pre-market? Let's leave the options talk to the side for right now. Kind of focus on uh, things that we can trade kind of in our price range. See, Snap was called out. Snap has always been a favorite of mine. USO and X Steel. Are good friends of mine, especially X Steel. X has just it's always got that high implied volatility, and it's got a really nice ATR for being such a cheap product. Now, I don't know how big of an account you trade with, but McDonald's seems a bit out of my price range. Cryos, but we can jump over and take a quick peek at it from the bigger perspective. So what are we looking at here? A J hook. We've got a massive bear flag on the 1 hour, and it fell down to support. If we look left, it fell right into this critical structure here, and I would run with tasty trades on something like this, and I would definitely put a bullish credit spread underneath this. And depending on how much time you're willing to spend on it, perhaps uh, a debit spread as well. All right, I'm not going to look at the rest of those big names that you're calling out there. Let's take a look at things that everybody else can trade to. Just kind of get wound up before the market here. NNDM is on the Black Box Stock site, platform, application, whatever you want to call it. NNDM right there. Looks like their alert went out at 352, so it's moved over $1. And if I'm reading that alert right, yep, there it is. TTNP. Bitcoin dumped over 7%. So we've got a few products in the marketplace this morning to take a look at. That's a heck of a dump on TTNP, that pharmaceuticals company. But it is getting a little bit of activity. I would be really cautious about this overhead limit here, right around that 20-cent mark. You can see that it keeps getting rejected. Persistence beats resistance. If it keeps knocking on the door, I would not be surprised to see it finally break. The support has been holding really nice though on the bottom side here at 16. So I'm sure for all the bag holders out there, they're probably very grateful for that. Good morning, Creed, you pimp. So there's only one pivot point in the near term on this. That would be right around the 2 o'clock marker, 18 cents. So I really want to see it hold that. Stretch this out a little bit and kind of make it ugly for a moment. Throw some fibs on there and see where our next target would be. And that would be, 20 cents. We already knew that. If we get aggressive with it, we could look for maybe 21 if we wanted to get really aggressive, but I wouldn't hold my breath on that unless this really gets popping this morning. Let's see what else we got. Let's take a better look at Snap. So Snap did fade back down, but this Globex or pre-market activity really bodes well. Finding that kind of volatility before the market opens up, and if you've already been trading it, then you might already be day done. Yeah, I did video 2 and tried to post it onto YouTube over the weekend, and it said this video has already been done. You can't put on a duplicate, and it's not a duplicate. So I'm still trying to figure out why YouTube is arguing with me, and that's not the first time that it's happened. I've tried to post videos before that it gives me that kind of error, like hey, I think it's trying to help me out, like just telling me, hey, this is a duplicate, you don't need to upload it, but it's not a duplicate. It's part 2, so it's done. Just gotta figure out what YouTube's problem is and get her fixed. Um, so yeah, and it does look like I'm gonna end up with probably 4 videos because I'm doing scalp, trade, and swing for the NQ. And I think each of them are going to have to be broke down into their own. So Snap is looking pretty good. If we look at this 1380 price level, it's holding. It's it's holding. That's all I can say. We did violate the line once, but it came back in. The buyers took it back up, but it's wobbling. It's definitely wobbly. Throw a Fibonacci on there, maybe give us a little bit of perspective from that pivot. They're going to be on the next level futures tab. Yes, sir. Or yes, ma'am. Yes, yes. I'm going to be putting a lot more work into that futures tab. It's empty. Need some good stuff in there. After hammering down on all the work done in the options tab. I feel pretty confident that we've got a great selection of material there. And so we need to start I need to start focusing on other products. I'm going to Forex is going to be something me and Creed have talked about Forex. I think it was last year around Christmas time we were talking about it. I know I got too busy to get into it. I don't know if he got too busy or he just decided to not focus on that right now. But um, I'm always looking at ways that we can help small accounts. And Forex is something that you can get into with a very small account, and it's also a 24-hour a day product. So it's kind of a win-win there, right? No, I don't think it has PDT, and 23 hours a day and small account friendly. So it's a win-win. You know, um, I'm always focused on what we can do to bring in more content, and so that's kind of once I flesh out the futures a bit more, Forex is where I'd like to go. There are, yes. You can't just trade Forex on the candles. You better know what's going on and what's going to affect that market. It'd be like trying to trade futures without understanding, or it'd be like trying to trade shares of a stock without understanding what happens when the Fed speaks. It'd be that kind of dangerous. Wow, McDonald's, man, that was a real big surprise. And Boeing, I was listening to Bloomberg talk about Boeing and Airbus and Lockheed because Bloomberg has like a reporter that specifically focuses on government contracts and airlines. And this this pop was a bit of a surprise this morning to me. I really didn't expect it to go that direction. Wow, that black box stocks is just blowing up. The alert's just popping in there. So PBBI is a $15 market. We're going to add that one to the list. See what we can get out of that. PBBI. Not my kind of market. NNDM has been steadily marching upwards. You could put a ruler on this thing. Be prepared for a pullback. Um, I'd like to get some price discovery out of it before I jumped into this, but let that first candle close, and if it can break the overhead resistance right there at that price shelf, I'd say you've got a pretty good entry. If you wanted to get real aggressive, you could just take it now, but that is aggressive to do such a thing. Be definitely be better to wait. This went Monday. It was at 33 cents. So a little bit of perspective. This is uh, this is up 63%. It's $1.80 this morning. It's up. So depending on what kind of trader you are, we've had this discussion before. If you're aggressive, you get in it now and you just manage your risk. If you want to be a confirmation trader and you got some rules for trading, then you would wait for this 5-minute candle to close, get a little bit of discovery, and wait for confirmation. There's no right way or wrong way. If you're aggressive, it's not wrong. If you want to wait for confirmation, that's not wrong either. It all comes down to what fits your risk and your account and your stomach for risk. Because if you puke up your position at any sign of weakness, then your uh, hair trigger on the to get in and out of the market, you're just looking at a revolving door of mistakes, right? So you want to make sure that your trading fits your stomach for risk. You can see that if we had waited for price discovery, we would not be sitting in a trade where the candle is falling against us, right? The 5-minute candle, even using that as our open range, which is an aggressive open range, even using that would be better than just jumping blindly into the market. Now on gamma plays on options, that's a whole different story. But we're not talking options. So we're getting some hollers on TTNP. Which is that 20-cent market that we were looking at a few moments ago. Come on. Thinkorswim. So there's that big pop right through the overhead resistance, and it didn't quite make it up to that 21, but it got darn close. I have never traded anything this small before. I've traded a 99-cent stock, and I got it in the 70s, and I've done that, but nothing this small. I don't have anything against it. I just haven't done it. It's not in my wheelhouse. All right, so we got some volatility on Snap. It's really trying to hold that Globex price shelf, which would be 1380-ish, and we broke through it. But you can see that the buyers tried to step in and hold this up, and they just can't do it, and it seems to be breaking down now. So, you're definitely getting a trade opportunity here. CETX is a call out that we got. Nice, very aggressive break at the open. This thing is already up 44%. That's an amazing move. Very aggressive. TTNP has faded back. Seems to be looking for some consolidation in that high. And Snap just might find, close the gap. Not find the gap. It might close the gap. That PBBI is that makes me a bit nervous. It's not the kind of thing that I like to trade. I think we're gonna quit looking at that. NNDM seems to be sitting on the moving average. If that can hold, we could get a little move off of that. And the black box stocks is driving me crazy. Oh my goodness. There we go. That is so much better. So TTS. Oh my goodness, what's the matter? I should have taken the time to learn more about how to shut that thing off. So TTS and CETX. Look. Alerts. No more alerts. Haha. I found it. Get out of the way. So I'll add those to the list. AP what? Where'd that go? APOP. Why does that sound familiar? All right, so TTS pushed up into that 1.5 and took a rejection, pulled back into the 30s. It's aggressive, but it's running. Very volatile from yesterday. Take a very good look at what happened yesterday, because that is exactly what I would expect again today. Some whippy volatility, maybe into the 60s, and then a fade somewhere around the 40s, mid 30s, and kind of, hover through the day from there. Yeah, CETX struggled with that roundy. You can see the sellers stepped in there and took profits. I can't blame them at all. A good 30-cent move like that, I would want to take profits off the table as well. ENDP did find some support around that 455 range, and I know ENDP just stays on my radar. That's just the way it is. X Steel found the 786, so that might be the low. I guess that's the 382, depending on which direction you're measuring it from. So if that's the whip off the low at the $11 mark, it could give you a nice trade opportunity. Kind of got to see how that flushes out a little bit. We've only got one candle, waiting on the second one to print. 4 or 5 minutes. I'm sure that Netflix is going to recover a bit. I'm also sure it's going to take quite a bit of time unless they come out with some really great media that could hype uh, the people who are investors and maybe hype the market up a little bit. On its own, it could slowly grind back up over the next 6 months, or even before the next earnings that it has again. But I wouldn't expect an immediate recovery. Yes, it did, and it's still doing it. It broke right through the bottom of that price shelf from yesterday at 11:30, and in this pullback, that's where I'd like to see it rest. That's also on the fib. Rest there and then break up to its next level. That'd be a great move. USO and X Steel correlate so often. Plus, it gives you an opportunity, like when oil is going to report, to be able to trade that, right? Because it'll get really volatile and whip around, and that's what we're looking for all the time. So if you can anticipate kind of economic news affecting something as cheap as this and being able to play the volatility, that's a great opportunity. You know, we want to take advantage of what we can when we can. So I really want to see this give me a in, and my in would be right around that 11:30 range. So I got an email from a new trader yesterday asking the question that seems to be the number one question I always get asked. Which indicator is the best indicator? Which one should I be using? And that's really the wrong perspective, but it's the one I get asked all the time. And I think it's a bit disappointing to people when I tell them your best indicator is your drawing tool. But hands down, knowing where price is going to run into resistance or find support is way better than looking at what price has already done and trying to mimic or anticipate that in the future, right? When you can draw a line and say, this is where I expect price to bump, to pause, to consolidate, you can anticipate, and there's way better edge in that than using something looking in the past. Now, the thing about volume is that with Thinkorswim, and it's not just Thinkorswim, but we'll hammer on this. The marketplace is recorded in billionths of a second. And the big firms are trying to hide what they do. And so when you see these sizes of 9,150, 3,000, 10,000, 6,000, that's retail traders. That's you and me. That's not the institutional or the algorithms or, the money managers. They don't trade that big because they don't want you to see them coming. They have an algorithm. They have a bot that will sit there and buy 100 or 50. Okay? And then they don't have to be reported for 30 seconds. So this might say that the trade happened at 8:43. No. That's when it was reported. You don't know when it happened. It could have happened 30 seconds ago. Now, when you look at USO, it's the same thing, or a level 2. Level 2 is not immediate. It's 30 seconds. They have 30 seconds. It's not necessarily 30 seconds, but they have 30 seconds to report the trade. So there's no obligation on their part to give you immediate data. 30 seconds is a lifetime. So, keep that in mind, that if order flow is a part of your trade dynamic, if it's a part of your trade logic, you're probably want to go to a place that sells access, something like black box stocks, or not black box stocks, but Bookmap. You get what you pay for, and what you're not getting here on Thinkorswim or Interactive Brokers or Tastyworks, none of those places are selling you access to that kind of order flow. And yes, this does have a very large bid ask. There are a lot of participants. If that's what you're wanting to see, that's definitely there. But trying to identify order flow to perhaps take a scalp position, you're using a delayed tool. That's a broken tool. It's not the best thing in the world that you could use. Tastyworks is just another broker. It's like Robinhood or Webull. Webull, by the way, didn't like that all these big institutions started coming out with free trading, and they aggressively started working on their options platform again. And I heard that in November, Webull is going to have options. I haven't seen the actual alert for it, so I don't have confirmation. But if it does, I'm canceling my Robinhood, and I'm just going to keep Webull. Tastyworks was developed by the guy who developed Thinkorswim. His name is Tom Sosnoff. So he owned Thinkorswim and sold it to TD Ameritrade, and then he opened a media company called Tasty Trades. But he was disappointed in the brokerages, and so after he had his media company called Tasty Trades, they decided we're going to come out with our own brokerage. And at first they called it something like Doughworks or something. Dough something. And they gave up on that. And now they call it Tastyworks. So the reputation of the guy precedes him. And he is super amazing, super smart, always gone out of his way to help people be better traders. And this is Tastyworks. Yep, Tom and Bat, which is his sidekick, they actually stream right there in that broker platform. You can watch their Tastyworks videos. Um, and they got a social media site. It's got a built-in journal trade, all kinds of great stuff. Yep, the Bat. The guy's a bit of a goofball, but he has changed and grown into quite a trader. So USO is testing this price shelf to the left. It'd be the top side, the pivot. Brokerages. I had someone tell me the other day, "Oh, I don't want two brokerages," and everybody can do what they're comfortable with. But I told them, you should think about having multiple brokerages because a brokerage is a tool, and we want to use the right tool for the job. So, maybe Tastyworks would be your options broker or your investment broker or your 401k account, and say Robinhood or Webull would be where you trade shares of stock and you day trade, maybe do a little options trading on the smaller side. TD Ameritrade would be where you would do your analysis and your technicals and fundamental analysis, keeping track of the market and the news. Every one of those is a tool. So X Steel did find its support at the $11, which it does a lot. If you go back and you look at where X Steel has been lately. Oh, what a mess. Let's clean that up a second. You can see the ranges are very clearly defined on this thing. I really enjoy trading it every day. This thing offers an opportunity. It's got a very large ATR for such a small product, and it's got a high IV too. So if you're an options trader, you do have that also. Gurn is another one that not high volatility, but a high gamma, especially on Thursdays and Fridays. I've seen a $3 gamma on Gurn. Now it's cheap enough that you can just trade the darn thing. You don't even have to worry about options. But um, it has a great stat arb, and we just want to take advantage of anything that we can. Now it doesn't have the ATR that X does and USO does, but still, look at that thing. It moves. It moves. It gives you some opportunities. You definitely get some trades. Now it took a rejection today at yesterday's high, and the buyers have stepped back in. You can see this complete indecision here. Looks like it's taking another run at it. We could get a break above yesterday's high, and if we do, I would expect to see a little bit of pile on. Maybe even just, a couple pennies. For something so cheap as this, a couple pennies can get you where you need to go. Mark Zuckerberg has been in the news quite a bit. Uh, I would be interested to see what happens if he says the wrong thing today. I see unusual put sweep activity on SPY. It's definitely worth pointing out. I need to move my black box so I can see it. You don't need to see it. I need to see it. So got a shout out on Snap that it took another run. Yes, it did. All right, so what do we don't need? We don't need that line there. Don't need that one. Let's kind of clean it up a little bit so we can see what's going on. So it broke through my angular line. and it's running right into the Globex. That 618 is overhead at 1428 on snap. I'd be very careful of that. You can see the major wick that we had on that first candle. The sellers stepped in and hammered that thing back down this morning a good 30 cents right at the open. And then from there in the next two candles, it really dropped down. So we've moved almost $1 off the low from 13.35 back up to 14.20, almost 14.25. The dotted purple line is the VWAP on the 5-minute. Oh, I'm not on the 5-minute. Let's fix that. There we go. Get a little perspective. Rearrange the Fibonacci. $14.6 would be the target if it can break above that 14.30. And that's a big if, because it just got rejected again. And you can see looking yesterday, it struggled with that level yesterday as well. And if we look back a few days ago in the Globex here, 14.30 again, that same level. It did provide some support for a while. It couldn't hold and broke through it yesterday twice. So that 14.30, it's what we would call a gravity point. John Eulers wrote a really great white paper on that. I can't understand his mathematics because the guy used rocket science mathematics, and it's a bit of a head twister. Trying to figure out how to code that is even worse. So I can't duplicate center of gravity markers, but I can recognize them. And the reason I bring those up, even if you don't trade futures, you might want to download this chart. And we've shared this chart multiple times. This is the S&P 500 E-mini, the ES, and there are cog lines that we use. And the reason that these cog lines are important, oh, I'm missing my line. There's supposed to be a cog line right in here, 2983. I must have deleted it the other day when I was moving things around. So use the one that's in the room drive. It won't have deleted lines. The line that is missing is where all this price action kept stopping or kept coming back down to. All right, those cog lines give you an opportunity to identify where we were, where we're going. And the example of how accurate they are is if you look back last year when we dumped out in October, when that airport in Mexico, the construction project was canceled, the market dumped, the algorithms kicked into high gear. We went from cog line to cog line and traded this thing through the volatility. It was an absolute mess. That's not the spot, though. I got to back up to last year. And the reason it's important is even if you don't trade anything but shares of a stock, knowing where the marketplace is about to get hung up is going to help you in your trading. All right, this is the volatility box that I was talking about. And look at how accurate these lines are. These lines have been on the chart for over a year. And price absolutely gravitates to those spots. Now, sometimes it runs right through it. But more often than not, especially on the intraday chart, when you see price moving towards one of these lines, you know it's going to get hung up there. That gives you edge. Yep, John Eulers is an amazing individual, but his math and I'm good with math. I don't mind bragging. I'm good. I use statistical mathematics in psychology. I understand bell curve statistics and mathematics, but rocket science? that no, that's a bit out of my range. Sirius XM took a pop after fading at the bell. I don't trade this as often as I used to, but this thing's got some moves, and it definitely offers you an opportunity. CETX is still flashing on black box stocks. Take a peek at that real quick. So this thing's walking along the VWAP, set a high a day. Oh, and it just broke through. So if you're looking for a trade, your price shelf would be the low here at the 1.9. So the break below VWAP is good. If you're looking for confirmation, you'd want to see a strong break below that 1.9. Let's widen this out a little bit. You can see that the 1.9 provided some resistance at the close yesterday, and it broke through it right at the open, very strong. Now it's providing our support. Try to take this out into a higher time frame. What we're trying to identify is where is our resistance. So this spiked up to 220, and if we look left, you can see that we have a history at that range. Could provide some trouble. And you got to recognize the thing is up almost 2%. Wait, where are we at? It's up 40% this morning. So even after fading a good 20%, it's still very aggressive. TTS, APOP, and GHSI. I think I had issues with that one before. Yeah, I think I was trying to look at that on TradeView and had problems with it. Maybe not. This thing's been very aggressive this morning. I'd be very cautious if you're going to play with something like that. It's still up 16%. Hey, good morning, Dan. So guys, I really hope you took advantage of the black box stocks. I know for the longest time I would not take advantage of it. I kept telling myself, look, I'm not going to buy it. I'm not going to pay for their services, so there's no reason for me to go over and see what I'm missing. That's not true at all. Even if you have no intentions of ever using it, it's free. You don't even need to put your credit card out there. You just click on the link and go over there, and you don't even need to learn how to use the darn thing. Platform wise, you need to understand what the alerts are, but you don't need to, take any advanced classes to see what charts that are popping up on it, right? ENDP broke support, the 455. Look, TTS is still ripping. There it goes, taking another run towards that high. Snap pulled back 1420. I want to really see this hold support. If you're not in a trade yet, keeping your eye on one of these, looking for your entry would be the best way to go. Instead of trying to trade all of them. So BMOC, if you look in the room drive, you should see something about ES. And it's just a text document, but what I did is I shared a text document with the ES chart. And so you might have to scroll down kind of deeper into the room drive. But I'm almost positive that I shared that ES chart in there. And like I said, I would share mine for you, but I think I deleted one of those lines that need to be there. It happens, I didn't see it in there either. Um, I know I have a copy of that. Maybe it's in the swing trade room. Not quite for sure. I don't want to share the one that I have though, because I know that I deleted a line. There's a line that should be there, and it's not. Give me a moment, and I will find it for you. I know where it should be. Haha. There you go. I just went to the Discord and got it. And every time I say the word Discord, I always have to add this disclaimer. The Bullish Bears does not have and will not be getting Discord. So don't ask. Don't send an email saying, ooh, when are we getting Discord? We're not getting it. So get over it. But if you would like to join Discord, I have one. It's mine. It's free. You're not going to get any trade alerts. You're not going to get any trade ideas. I don't post watch lists. I don't post market data or economic news or anything like that. It's just free stuff that I got on the web. And I thought it was useful and saved the link and put it in my Discord. Okay, so if you want to do that, it's full of Bullish Bears members because I don't advertise it anywhere and I don't go looking for membership from anywhere. So you'd be pretty much hanging out with the same people that you hang out with here. A really great crowd that doesn't talk because I lock down all the rooms so you can't communicate, you can't share, you can't comment, you can't talk in my Discord except for one room. Uh, but the bots work, the Twitter feeds work, and it's full of economic data like Bloomberg and Seeking Alpha and all that stuff. TTS still pushing, breaking into no rejected. Let's see. Let's blow that up and see what TTS wants to do. It seems like it's confused. Nice. Nothing in the way. Looking left. This recovery is looking really good. I can still hear Lucien in my head talking about markets that want to close the gap. That's a heck of a gap. I don't think it's going to close it in the next day or two, but it's definitely working on coming back. And if you can't quite understand why it's trying to come back, think about taking a rubber band and stretching it out. Right? When you do that, you put a lot of it gains energy, right? And then when you let it go, it dissipates that energy. It snaps back. The marketplace is very far away from the mean, very from the average, from the center, and it's trying to come back into the middle. If we was to put the linear regression tool on here, you can find that in Thinkorswim by typing LEG. Nope, LIG, LIN, LEN. You can spell, man. Type reg. There you go. I like the 50. You can use the 100. Doesn't matter, but it does matter how much time you're showing on your chart. Not just if you're on a 4 hour, but how many days on that 4 hour are there. You can see that we are a long ways away from the center, and price is snapping back towards the center. This is what they call regression trading. Look at every time price extended itself too far away from the center, it snapped back. Right? That's exactly what happened here. It went from the extreme, it snapped from one direction to another, and now it's getting whipsawed back the other direction. It's reversion trading. Counterintuitive. It takes some getting used to that when you see a market ripping into the highs, that you would sell it. Right? That's selling into strength, and buying into weakness goes against everything your gut tells you to do. So TTS trying to snap itself back to the center. And if you're wanting to use that regression tool on an intraday, you can just put it on today. So you change your time interval not to 1 day, but to today. And that will change the regression channel around. The 50 is the deviation. Don't want to get all nerdy and geek on you. But the linear regression uses a standard deviation. And so you can see that this is using a half of a deviation. You can read more about that because Thinkorswim has an education tab. You can go into the Learning Center and go to Technical Analysis, Technical Indicators, Studies, and they're alphabetized. We want linear. Ahí está. And then you can read all about it. I see unusual put sweep activity on 3M, on MMM for all you options players out there. Now look at TTS. We are right at an entry point. If you are a confirmation trader, here's your breakout. But look at those sellers. Every time it tries to break up to that new range, the sellers step in. Let me adjust my moving averages for a more appropriate time frame. So I don't like these sellers wicking up here. And notice it failed to set a new high. I would not be surprised if this fades back a bit before it moves up. If you want to take the trade off of support, you'd want this to come down and tap that 9, just like we had here. So it made a run up, faded, rode the 9, and took a pop. You're looking now for the pullback. Now, this is where the intraday Fibonacci comes in, and I did a video on this. I was disappointed when I was learning Fibonacci that everywhere I went, somebody was telling me what I couldn't do, what I had to do, how I was wrong. And since nobody knows how the darn thing even works, I wasn't going to let some guy on the internet tell me what I couldn't do with it. One of the things they say don't do is don't do intraday. I disagree. I've used it intraday very effectively. I appreciate the value of it. It's one of the greatest assets that we have. So the only rule that I have for the Fibonacci, and I hope everybody takes it to heart, is be consistent with it. If you read a certain way, continue to always read it a certain way. Like for me, if price violates the 786, but the candle hasn't closed, I don't consider it violated, right? That's how I perform analysis on this. And I stick to that. I don't change my mind later on and say, well, on this market, I'll consider it broken, but on the other market, the candle hasn't closed. Be consistent how you read it. That's my only rule for the Fibonacci, right? And I think that's a fair rule. I don't think I'm asking too much for you to be consistent, because that's everything that we do. We need to stay consistent with it. Even our losses shouldn't be inconsistent. You should have a planned exit that is X amount of money, and you draw the line and say, look, if I'm wrong, this is where I'm getting out. And that way you shouldn't have, a 50% loss here and a 20% loss there and a 5%. Everything should stay consistent. So we are tagging that 9 at the 1.6 price. And there it goes. There's your bounce. Notice how the buyers stepped in and picked it right back up. Now I am on the 2-minute. I'm not on the 5. And that does matter. It is a change in perspective. See that very wicky candle in both directions. Now for me, once I've got my analysis done, we can see that this is trending. It's not like we need some indicator to say, hey, it's trending, because yeah, it's pretty obvious. Once we've identified the trend, we've got our resistance mapped out, and you can see there's nothing here, right? There's nothing to the left that's going to give us problems. We can start to step into that lower time frame and look for a trade. The trade comes down to, what are you looking to do? Are you looking to take a scalp or an intraday trade? And the reasons for that is very clear. Your position size and your risk is what comes into play. You can fade in to your trade just as easily as you could fade out of your trade. So if you wanted to, for an example, put orders in somewhere around the 6.0 or the 6.1, just have them sitting there waiting, and you don't have to go large, say 100, 200 shares. Price could let you in, and then you could have your line drawn in the sand. If you get in at 6, you could look left and say, what would be a failed trade? What would be my line in the sand to say, you know what, I was wrong. My analysis didn't work out and I need to exit the trade. We don't have to use a monetary value to decide where our exit would be if it goes against us. We can just use common sense and say, this is what I think it's going to do. I think it's going to go up. If it breaks whatever level, then obviously my analysis was wrong. I need to abandon the trade. For me, I would just use the 786. So if I was to go long from the 6.0, then if it broke and closed below the 786, I would look to abandon my trade. Because if that does not hold, then my analysis was wrong and I need to get out. And then we could scale in. If I got in at the 6 with, say, 200 shares and it broke above the high a day, I could use that as a spot to scale in and perhaps add to my position. But if I'm scalping, we would do everything completely different. For a scalp position, we would start with a large size. We would have a very tight stop, and we could scale out of our position, leaving nothing left but a runner by the time we're done. Neither one of those is, quote, wrong. Just depends on what kind of trader you are, how comfortable you are. So TTS is really looking good. Let's see what else we got on the list. No, that's an expensive one. I was going to say AYX is on there. CETX is still flashing around. This is one of those that is struggling at that high, that resistance box that I drew. You can see every time it gets up there, the sellers are stepping in. Nobody's interested in holding through that. So we just don't have the participation yet. But the moving averages are catching up. And that VWAP has been providing some really great support. So a failure at that level would offer us an opportunity. And it's also the roundy. That's real important to point out. Roundies are psychological levels of support and resistance. Nobody understands exactly why that's true, but it's absolutely true. So failure on that too would be an opportunity to hammer it back down, even a good 10 cents. And a pop off of that too could be our opportunity to get back up 18, maybe 20 cents if we can set a new high. Brownies. So, side note, someone shared this with me the other day, and I think it's still in beta, so, take it with a grain of salt. I don't know much about it yet because I seriously just found out about it yesterday. This is options flow. It's bullish sentiment, put calls. You can dial in what kind of alerts you want. It's kind of like a black box stocks or cheddar flow, but it doesn't cost anything. Now you get what you pay for, so that does have to be mentioned. But I'm going to share this with you guys in the room. Like I said, I just found out about it, so I don't know, anything about it yet. What it's doing is it's giving you a put call ratio. It's showing you which one has the higher sentiment, and it gives you an alert. And then you can see the chart. So, take a look at it. Understand that from everything that I've heard, it is still in beta. But hey, I like free, right? So take a peek. You might find some value in that. All right, black box stocks is showing TTS with a volatility at 0. Their alert this morning came in at 118 and it's at 168. That's a heck of a move, 50-cent move. It's got some really strong volume too. Now, for those of you who keep your eye on volatility, if volatility spikes are a part of your trading, VIX and TVIX, those are going to be the last things to move, right? If you want the most immediate indication that there's something going on in volatility, you're going to want to watch volatility futures more than anything else. But to kind of keep your eye on what's going on through the day, VIX or TVIX, either one of those would be more than fine because it's just a glance, right? It's a casual look at what's going on in the volatility of the marketplace. There's nothing wrong with either one of those. TVIX and VIX, they're fine. But if you want immediate alerts on what's going on in the volatility, you're going to want to watch the volatility futures. Right? You can set alerts there to give yourself warnings of, kamikaze volatility in the marketplace. And if you want to know the volatility of the volatility, as funny as that may sound, you would want to go to the VVIX. And what that would mean is if you're on the VIX, you can't look at the implied volatility levels. Well, we use implied volatility to help us gauge how volatile a product is. The VIX is a product. If you want to know how volatile it is at this particular time, you would look at the VVIX because this is the implied volatility of the VIX. And that's enough of that geek stuff. We'll go back into something that normal people can understand. TTS breaking into new highs. That's absolutely awesome. So this thing has been spectacular at following our market analysis, and the overhead resistance is at the 1236, which would be $1.81. That would be where I would anticipate the next rejection. And looking at this, I came up a bit shy. You can see that it hit something and it in that candle and it paused a little bit. It pulled back slightly. Now I'm not interested in moving my Fibonacci though. I'm still pretty confident in where I have it. But using Fibonacci, it can get a little arbitrary, right? Sometimes it's up to the individual to decide where they're going to put their anchor points, and I think that's where most traders really start to struggle with it. Because if you're new, you're not quite comfortable or not quite sure of the points that you're using to anchor your Fibonacci, right? But don't let that intimidate you or stop you from using it. One of the greatest things you can do to help you get more comfortable with Fibonacci is to use the hard right edge. And I've done a video called Trust in Analysis. Really take the time to get some trust in the Fibonacci. If you can't trust Fibonacci, you're going to miss out on some really great trade opportunities. But it's hard to trust, right? It's hard to trust. That broke right through the 1236. I'm going to step into a little bit of a larger time frame. Let's get a larger time frame Fibonacci on here so we can identify where a major level of resistance is at. All right. So it looks like the 187, which is the 618 Fibonacci, would be our next level of resistance. That's a major timeline Fibonacci that has more validation than an intraday Fibonacci. And after that one, $2.14 would be the final one. So we do got target levels. It's Hey Creed, did you see that meme where he looked like one of the Borg from Star Trek? That was a really great meme. Is the president supposed to be speaking today? I just seen a post about somebody saying the president was going to be speaking. Now, since I'm live streaming, I don't have my media feeds like I normally would, and I think that's why I'm a bit blind on the days that I stream. So TTS has failed a sudden sharp pullback to the 9 at the price structure. That's the 100 fib. Recognize the level Where was we anticipating a correction? The 1, 2, 3, 6. It got there and it took its rejection. So this wouldn't have scared me because I had the Fibonacci there. I understand why we took that rejection. I don't like it, but I understand it, right? That is one of the reasons I love Fibonacci so much. When we don't know why we're getting a pullback, then we don't know if it's a pullback or a change in market sentiment. When the market came up and hit here at 160 and it suddenly fell back to the 9, having a Fibonacci there let us know that not only did it fall back to the 9, it fell back to the 786. And then we moved the fib up and we took a pullback. Now we would move the fib up again and we took a pullback. Now what I don't like to do is stretch too far on an intraday basis. And the reason for that is because every time you stretch, you're moving your target. And if you move it too far away, you're going outside of your ATR. So we want to adjust the bottom of the Fibonacci to the lowest price shelf from where we're at. Like I said, when I was learning Fibonacci, this stuff, everywhere I went, they said, oh, don't do that. That's wrong. It's absolutely wrong. Yeah, I don't think so. I've back tested the hell out of that thing, hard right edge and everything else. And doing this has helped me be very profitable on my intraday trades. And so I do it. We got the psychological level at the 1.9. And then after that, the major $2 line. But remember, on the larger time frame, 1.87 is a level of resistance. What's the gamma load on Facebook, people? Anybody know? Anybody know? Anybody know? Órale, güey. Got a spike in USO. That was a call out from Dan the Man. Look at that. Oil news came out, and away we went, which means X should also be moving, and if it hasn't moved yet, it could be your opportunity. ENDP also popped off the low. CETX breaking to new highs. Still in the resistance box. Not sure what is going on because I'm media blind, but something just whipped the market. One thing that we can do, even being media blind, is we can jump over to Market Watch. This is the Dow Jones. We've got almost a 15-15, but the money flow is absolutely bullish. Look at this, 13 are up, 17 are down, and yet you've got 60,000 in capital versus 30,000. So a 50-50 money flow, bullish, well above the advancing versus declinings. Now the Dow is okay. Look at all that red, by the way. Look at all that red that was there, and yet it was still bullish money flow. That's divergence. We're looking at a bullish divergence in the marketplace coming in. Now the S&P is a 60-40. The money flow is not divergent in the S&P. We're looking at 150,000 versus 78,000, so it's a 50-50 money flow, but it's a 60-40 issue. The red here is still dominant. Flip over to the NASDAQ. Being able to identify divergence in the marketplace when it comes to money flow gives you the opportunity to anticipate the major market reversals before the reversal happens. NASDAQ 60-40, the money is not 60-40. It's above that. So strong bearish money flow here. The only thing turned around at the moment is the Dow. When we're looking at the marketplace, we need to take a look at the sectors in the marketplace. What is carrying us in the direction that we're going? Bonds are up. The market is down. Oh. Consumer discretionary It looks like it finally found a base. Industrials testing a price shelf. I hope that holds or we're really taking a ride. The industrials doesn't get as much recognition as it should. It's just not sexy like tech and energy and healthcare, but it is absolutely critical to the marketplace. Notice that the financials are finally starting to find some support. They faded down quite a bit from their high of day. So we need this weakness resolved. We've got weakness across the board. The only thing real strong would be healthcare. And energy popped for a moment, but it's getting a bit of a fade. It's probably from that oil news. And here we can see the cumulative tick, kind of get an idea of what's going on in the market with sync. We want to see them moving together, working as a team. We've got 3 markets in distribution, 1 market in accumulation, and we have no sync, not much of one any. All right, all right, all right. Now, one other thing, if you'll give me just a moment, I have to adjust a stream that I had going on.